Well, guys, it happened again. On Friday, we saw panic selling take place just in time for a sharp Friday reversal. And this candle produces a very interesting signal that I want to talk more about, which is why I'm doing a Saturday video. Usually I don't do videos on Saturdays, but this was just too much of a topic for me to pass up. So let's talk a little bit more about what happened on Friday in the indices and equities market and what this could signal for next week. As we get started, if you could help me out, hit the thumbs up button, subscribe to the channel if you're new, and let's get right into it. So I want to show you something. So here's the put to call ratio, and this is one of my, if not my favorite way to track crowd sentiment. And the reason I love it so much is because the put to call ratio is a really simple concept. It just looks at the volume of puts versus the volume of calls traded specifically on the symbol that you select. So if you trade gold or whatever, you can also select that here within our drop down. But I'm just leaving on SPX for a second to make this point very clear. On that October 10th drop, we saw a very sharp reaction from the market. Markets dropped quickly, and guess what? Everybody rushed to buy puts. Put volume exploded higher. And so that was interesting because that produced a rare signal, which is basically everyone panic sold. Lo and behold, the next week, the market recovered and actually went to fresh all-time highs. We saw an interesting and very similar signal happen on Friday. In fact, eclipsing, taking even further, more bearish sentiment all at once this past Friday, or yesterday, I should say. So everyone once again panic sold on Friday. Now, will this produce a similar type outcome where the market continues to push back through all-time highs? No one knows for certain, and anybody who claims to know with certainty what's going to happen next in markets is a fool. Nobody knows. But I think that it is a pretty good educated guess to think that we could have more upside in the markets at this time for a multitude of reasons. So I want to talk a little bit about what I personally did, because one of my biggest pet peeves when it comes to trading YouTube is a lot of people talk out of both sides of their mouth, meaning they say it could go up, it could go down. I chose to buy the dip on Friday, and I alerted this with inside of our VIP Discord. I bought QQQ. I also bought SMH, which is the semiconductors ETF, on that dip. And my goodness, I wish I had more entries that looked like this, because look how we came down to this area of support on SMH. This is semiconductors, so think NVIDIA, AMD, Qualcomm, all that stuff. That stuff got bought so aggressively towards the bottom end of the day. There was a little bit of an announcement that maybe the Senate or there was going to be some sort of vote to end the government shutdown, or something that was positive development on the government shutdown. A move from the Democratic side, I think, that was exciting to investors. Clearly, that tells you something about this market, guys. That tells you that the market will cheer a resolution to the government shutdown. However, that was not why I bought the dip. In fact, I've been trading the same system, the same strategy for years, and let me show you how that has worked out over the years. What I'm showing you is my all-time performance on my public Webull, which is a US regulated portfolio. I'm not showing this to brag and show you how much money I've made, but rather that what I teach on this channel through my experience and through my kind of showcasing of trades that I'm taking, I do so with verified results, not to waste your time. And I know how frustrating it can be to watch traders on YouTube who never actually show their positions. So that is my kind of promise to you, is if you're considering subscribing the channel and spending more time watching me, I would highly, highly recommend that whoever you watch, make sure they actually show you their portfolio, show track record, show, there's a couple of us, like another really notable trader that I really like, two of them actually, Financial Education Jeremy and Adam Koo. They come to mind right away as showing their positions and portfolios frequently. Check them out. But also consider subscribing to my own channel, as it's not easy. Let me be fully real with you for a second. It's not easy to talk about trades that I'm in, because so often, right? Imagine if you had to show everyone your trades all the time. So often we look foolish in our trading because no one knows for certain what's going to happen next. It is all educated guesswork. That being said, taking a look at the QQQ, I bought the dip, and there's a reason. I have a repeatable system that I use over and over and over. It is with the help of the Edge Finder. So if I'm taking a look at the NASDAQ reading, we didn't lose bullish rating, right? So everybody got panic sold on Friday. Everybody, AI bubble's going to crash, and everyone panic sold on Friday. Now, not everybody. There were some buy the dippers out there, but a lot of people, we saw that in the sentiment, right? Take a look over here on your far right hand of your screen. Retail sentiment got very bearish. The crowd got bearish right as the market once again, this is literally, I mean, I don't know how many times we have to watch this same show, right? The same movie keeps playing out. Everybody panic sells in a bull market, and guess what? It's a bull market, so people buy the dip. Now, that will break eventually. Let me not sound too overly, kind of know-it-all on this, right? Because that will break at some point. At some point, I will take that entry, and it will flood through the lows and keep going. And maybe that will be this next week. We don't know with certainty what's going to happen next. So with full transparency, I do not know for certain if the NASDAQ's going to push higher, but I took an educated guess on a trading system that I have made a considerable amount of money with over the years. Not every single trade I take is correct, right? But over time, the system and the strategy works. And so I follow it, right? So we had a very bullish reading within Edgefinder on the NASDAQ specifically. Technicals are a little bit mixed because we lost some of our momentum on the daily chart, but we did certainly find some strength here. However, we still have the story that I think plays out into year's end, which is the end of year seasonality. So keep your eye on the ball, right? You have so many people. I had somebody comment on my video yesterday that they sold their whole portfolio. They sold their whole portfolio towards the lows, and they're super frustrated because the headlines were so scary. And again, I'm not criticizing that person because that works on all of us. That's human nature to see scary headlines and be like, oh yeah, this is an AI bubble. It's all going to crash. But history tells you that bubbles can go on so much longer than people expect, and it is a fool's game to try and call the top, in my personal opinion. What we still see when we look at the S&P 500 is a consistent overall higher low, higher high. Until that structure breaks, I am not going to be arrogant enough to claim that I know that the top is in, because I don't, right? This thing could be taking back all-time highs in a week's time. Or maybe the bears are right this time, finally, for the first time in 2 decades, that we're actually going to see a sustained downward move. And I say that jokingly because, of course, there are bear moves, but it's been tiring, I imagine, to be permanently kind of negative on the market at this time. So let me get back to what I was showing you with full year seasonality, specifically on the S&P 500. Keep your eye on the ball. There's a couple things that we need to talk about. Seasonality, right? I'm not going to write that. Seasonality is one of them. Eye on the ball. This is a very obvious overall trend that has happened in the last 10 years. In the end of a good year, what happens is portfolio managers who are looking at their accounts buy every dip because it is their chance to potentially catch up to a market that has left them behind. We've talked about this on the channel many times. Institutions sold during the April sell-off because they were scared we were going into a recession. Some of them let their politics get in the way. And lo and behold, it was actually retail investors who bought the dip big time in the April sell-off. How do I know that? I'm not just pulling that out of my, what. I'm actually getting that because brokerages reported net inflows from retail investors at massive scales. So retail bought the dip. So institutions were left holding the bag on short positions or closing out of positions. And now going into year's end, the last thing institutions, in my view, and what I think is likely to happen, I think the last thing they want to do is report to their clients, hey, yeah, all we did this year was we sold all your stocks down here. That is not a good look. So what are they going to do? Well, it's been a really remarkable recovery year. They want to be able to hold that baton and bring that to their customers and clients and say, hey, we were long. So to me, it's really simple. Seasonality looks good. The Fed is still poised to cut interest rates, maybe in December, but probably very likely to happen in 2026. So Fed is on our side. Don't fight the Fed. The Fed is cutting interest rates. The economy is holding up decently. Now, I know there was a lot of scary stuff about the consumer and, a lot of stocks like we can point at, like Chipotle, right? Here's like some retail facing stocks. These are ugly. Chipotle, right? If you want to talk about Lululemon, if you want to talk about Nike, right? You can look at a basket of stocks, even Meta, right? Some of the big tech stuff kind of falling apart here a little bit. Look, I get it. There are some reasons to be worried about this market. But momentum favors the upside because the Fed's cutting interest rates. Most of the Magnificent Seven stocks have performed very well in terms of their earnings reports. And we also have, again, a market scanner that focuses on, very simply, the economic growth, the jobs market, and inflation data. Jobs market's not great, but inflation data has been cooler than anticipated by economists. Let me show you. So if I go over to my inflation data and we say CPI year over year, is it rising? Sure. But this red line here, this is what matters, right? This is where, what separates people who really understand fundamentals from people who do not. People who do not understand say, oh, inflation's rising. That is just, that's doomsday. Well, remember, the market is priced for the red line. The market is priced and expecting inflation to rise more than it actually has been. So that tells me that is an upside potential, right? So if the market is worried about, here's a way to read it, right? If the market is pricing in a lot more inflation to come, but the market only gets a little bit more inflation, that's a good sign, right? It's like if I told you it was going to rain all day today and instead it only rained for an hour. That's a lot better. It's not great, but it's better than an hour or all day rain. So same thing. So inflation has been not necessarily perfect, but remember where we're coming from, right? The Fed is still looking at this big picture. They're saying, okay, inflation still made a ton of progress over the years. Yes, we're rising. We want to keep an eye on that, but we're not, if we were rising way more than forecast, that would be really worrisome. We're rising, but less so than forecast. That is important for us to know in the rate cut story. So, what about the jobs market? Jobs market's been rough. Well, ADP numbers actually beat expectations this past week. They came in a little bit better. And so when we actually take our eye and we keep it focused on the big picture, we look at the economic heat map from the US and we say, most of these still favor US stocks, right? Keep it really simple. Don't let the headlines and all the spooky news cycles tell you that the market is going to crash, because that is their game. Their game is to constantly scare you and constantly tell you the market's going to crash. So what do we do on this channel? We just look at the data. We look at the data that is coming in. We look at price, we look at momentum, and we build trades around it. With the help of software, we can track all this stuff. You can't possibly do this all in your head. I mean, you can, but you would have to be spending 8 hours a day to keep an eye on all this stuff manually. So we built tools for this. And I do want to just remind everybody who is watching right now that we are currently doing our Black Friday discount right now. It's our biggest discount of the year. If you want a copy of the Edge Finder and you are serious about this stuff, if you want to take your macro and sentiment tracking tools to the next level, get a copy of Edge Finder. It is 40% off. Down below in the description, just use that promo code that you see there, and that will give you a chance to pick up a copy at the lowest price of the entire year. That discount code, by the way, YTVIP. You can also add at your checkout, if you're interested, you can also add the VIP group and come see the trades that are being taken by myself, Marco, Ivan, and even Chris Pulver if you sign up for that as well. So back to my trade here. Look, the NASDAQ, to me, I've said this many times on the channel, and I will say it again. When we look at the NASDAQ on a monthly chart, yes, we have had 1, 2, 3, 4, 5, 6, 7 months in a row. But the gambler's fallacy is saying we've had 7 months in a row, we have to have a down month. That is a dangerous assumption. Instead, what I look at is I say, okay, we've had 7 months in a row, but for us to determine that maybe this thing is actually rolling over, let's draw in some simple lines and say, okay, on that previous month, if we actually close below that, then yeah, you've got me, my hands are tied. We've got structure that looks like it's breaking. But until that happens, this whole candle is a dip buy until proven otherwise. So what we call this is innocent until proven guilty, okay? Whereas perma bears, people who are betting against the trend, what they do is they assume this thing is guilty before it shows signs of being guilty. It's, again, the justice system here is at work. When it comes to this chart, it is innocent until proven guilty. We have momentum to the upside. Sure, it will break down at some point, but is that going to be this candle? That's the danger of what many traders will do, is they will assume, no, I know it's going to break this candle, but they've been saying it since this candle and this candle and this candle and this candle and this one and this one, and they were definitely saying it here, right? People who stay, they permanently stay bearish. They refuse to acknowledge what's happening, which we have a very strong upward trend and dips are being bought. Look, you will be right if you keep saying the market's going to crash. The market's going to crash. It eventually will. The problem is, in the meantime, us who are trading actively and just riding the momentum. I mean, I'll tell you candidly, I've made a lot of money sticking to momentum and macro for the last few years. Will it eventually not work anymore where we break lower and we fail? Yes, but everything has failures. Everything has breaks and losses in trading. But for now, momentum is in favor of the bulls. So yes, I bought the dip on Friday. I'm still long. I bought, like I said, QQQ. I also bought SMH. I am still long a number of stocks, individual stocks like Robinhood, which I bought back in April, and Tesla, which has been my best trade of the year. I'm still long Tesla. Everything that I do is based on the tools that we build. So if you don't have a copy of the Edge Finder, like I said, pick it up and start using the data on your side to help you find better trading opportunities. When it comes to Tesla, by the way, I need to add a stop here, but basically if we fail to hold this area, I'm going to get out of that trade. So let me now that I've discussed why I think the upside is the path of least resistance, let me acknowledge what I will do if I'm dead wrong in everything I've said so far. If we come down to this area again and we start to fail out here, I'm going to stop out. I will probably try to buy the dip again if Edgefinder still has a strong reading at the prior all-time highs and this October 10th low. So my next area to try another buy, and again, I say try because this is a campaign. We never know exactly. I went long around here. I closed out around here. I got back in. Actually, let me take that back. I got long around here. I closed out around here. And then when we started showing some signs here, I went long again. So if this doesn't work, my next plan is to stop out, take a loss, take a controlled loss. This is not leverage. This is not a huge position. I mean, it is a big position, but it's not huge relative to the account. It's not an appropriate risk size. It's a very, very appropriate risk to the account that I'm taking. If this thing flops to the floor and we continue to roll over, this area of support is my next area to watch. And finally, this area here. If that breaks, what that tells me, if all of this fails, right? If everything that I just outlined here fails, then I was wrong. And the beauty of trading is that if you're wrong and you acknowledge it, you can survive and live another day. If you're wrong and you refuse to acknowledge it, the market will humble you. So when it comes to what I'm sharing here, I'm sharing my opinions and I share them publicly, and I'm right sometimes and I'm wrong sometimes. I've been doing this for a long time. I genuinely, I really appreciate the positive comments and people who support my work. I really do appreciate it. But if you strongly disagree with how I trade, or you have something to say, or, oh, you should have done this, or it was obvious that you should have done it, like, that is great. And I encourage you to leave comments like that. Like, let's have the conversation. But I will never trade or change what I do in my trading based on people who are commenting. Like, and I don't mean that disrespectfully. I want you to comment. But I want you to understand, you shouldn't either. You shouldn't change your strategy based on what you see or hear online. Instead, you should change or build your strategy around backtesting results. That's it. So I have a system. I have a strategy that is built around price action as well as the Edge Finder's findings. And I've done it for years, and I will continue to do it because, again, not every trade is a winner. And if this is all incorrect in what I'm saying, it's no sweat off my back. We reset, we take the next setup, we move along, and drawdowns are inevitable. But I think, again, my system, my strategy tells me this was a very nice candle on Friday. This also tells me Edge Finder confirmation for bullish setups. We had crowd sentiment get scared, right? That adds even more fuel. This is my favorite setup in the book. And that's exactly why I went long over here. That's again why I went long on Friday. If it doesn't work, this is a good example of, like, sometimes, let's say this doesn't work at all, right? This is a good example of where it worked perfectly over here and it may not work perfectly over here. Every trade is just another iteration within a system that you should trade for the next 1,000 trades, not the next trade or two. It's the fundamental difference between people who, consistently make money over the long stretch and people who lose money consistently. People who make money, it's really simple. They have a system that they backtested and they don't overvalue the results of one trade, right? So if this trade works great, awesome, just another trade in the bank. But if this trade fails completely, I'm not going to change my system just because it didn't work once. Anyways, just a little bit of a rant. Hope that was helpful to you. Like I said, if you want to trade alongside me and the team inside of our Discord, all the information can be found in the description. And do not miss the opportunity to get Edge Finder at 40% off. It's the biggest discount that we do all year long. All the information can be found in the description below. Have a great rest of your day.